Mortgage delinquencies in Canada shot up in the last quarter of 2023, posting some of the largest year-over-year increases on record, with Ontario coming in at a 135% year-over-year increase in delinquencies. But could it be even worse than the headlines have suggested? No, not really. In fact, this is more like a return to historical norms. I know it's not good for clickbait purposes to tell you all that up front, but hey, the other stories are good this week too. That's right, folks, it's time for another Friday update with your old pal Millennial Moron. I've got 4 stories for you today, and in contrast to the usual all bad news updates that we usually like here, this one is mostly neutral. But it's still a good week in terms of knowing about what's going on. If you actually enjoy these videos for some reason, make sure to subscribe, like, comment, or whatever you want to do. I'm not your supervisor. First up, as expected, the Bank of Canada held their policy rate at 5% on Wednesday. No surprises there. As is tradition, the media decided to acknowledge this news with a photo of the Governor of the Bank of Canada going like this, which they've been doing for at least a decade now. Also worth noting, Bank of Canada Governor Tiff Macklem looks like a cartoon turtle. Not in a bad way, it's not an insult or anything, he just does. I look like a bird, it's fine. The Bank of Canada has also noted that cutting rates could lead to a hotter housing market, which would increase inflation, further delaying the rate cut schedule. Funnily enough, this means that the real estate industry pumping the housing market with promises of rate cuts may actually be delaying rate cuts by further inflating housing costs. Oh well. However, as you might expect, the industry is already pushing the idea that the housing market is heating up based on rate cut expectations, and that is a great time to get an adjustable rate mortgage. Look, I'm not saying that this is definitely bad advice, but if you are thinking about buying a place, just make sure that it makes sense with your own finances and that you can still manage it even if things don't go exactly the way you expect. That's all. Anyway, after the announcement, they had a press conference about monetary policy. Normally these are dominated by questions about when the rate cuts are coming, but this time Mark Rendell of the Globe and Mail asked the following actually relevant question.
Hi there, Mark Rendell here. Thanks for taking the question. In the past 2 months, the Bank of Canada relaunched its overnight repo operations, recommenced the Receiver General auction. Does that suggest that the quantitative tightening program is nearing an end? And could it be wound down earlier than previously signaled in late 24, early 25?
Yeah, Mork! Good question, good question. I don't know if this guy's been watching me or Mark Mitchell or doing his own thing, but either way, 10 out of 10. Here's the bank's answer.
Towards the end of the year and in January, we did do a series of overnight repo operations, lending typically about $5 billion overnight. And we were doing that because the overnight rate was moving up. There was upward pressure. It was moving above the targeted overnight rate.
Yeah, I mean, our sense is where that pressure was coming from was as sort of later in January, markets kind of settled into the view that central banks were likely to cut rates soon, and that pushed the demand for long bonds up. A lot of participants were purchasing those long bonds on leverage, so the demand for funding was up sharply for a stretch of time.
So basically, their opinion is that overnight lending markets were tight because banks were too busy lending money to people who wanted to buy bonds because they were expecting rates to fall soon and wanted to buy up bonds while rates were still high. They also note that they haven't conducted any overnight repo operations since January, and in fact, the overnight repo rate average has fallen back close to the bank's target in recent weeks. A good follow-up question might have been, if this was caused by expectations of rate cuts, why didn't it happen any of the other times people were expecting rate cuts? Another one might have been, if you aren't ending quantitative tightening early and the overnight rate has been falling back to target on its own, why did the bank's settlement balances suddenly increase by $33 billion at the end of February? But hey, what do I know? I can't ask questions to the Bank of Canada because I'm not a journalist. I'm just a guy who makes videos in his mom's basement or whatever. But hey, Mork, if you're watching, try asking them about the coincidence of the relaxing of the overnight repo rate average with the sudden increase in settlement balances deposited at the Bank of Canada. However, instead of one of those questions, what we ended up getting was a lot of stuff like the following question from our national broadcaster, the CBC.
You have some really clear language in both the statement and the decision that it's still too early to consider dropping rates, that you don't want to keep monetary policy this restrictive longer than you have to, but you don't want to jeopardize progress. I wonder what your sense is as we move into the next sort of round of decisions, how much forward guidance you think you'll provide. Do you expect to see that language change before you actually move rates, or do you think that you'll just get straight to cutting without providing that level of forward guidance?
Okay, so I understand you can't tell us when you're going to cut rates, but that's fine, I understand that. But tell me this, can you tell us when you're going to tell us when you're going to cut rates? Anyway, as usual, if you want more details on this story, I highly recommend Mark Mitchell, who has been covering this more closely and in much more detail than I have, and is absolutely worth a listen if you're interested. I'll link to his channel in the video description. Next, BC Housing has filed 13 lawsuits against buyers of affordable housing units who lied on their applications to purchase a unit in an affordable condo building in Victoria. Many of the allegedly fraudulent buyers are already multiple property owners who didn't actually live in the properties after purchasing them. The intent of the program was to give middle-income families a realistic chance of purchasing a home in their price range, but even with so many regulations in place, many of the units were still scooped up by investors. Some commenters have cited these lawsuits as evidence that the oversight program is working, but personally I wonder why this type of vetting of buyers is not done up front instead of years after the fact. While the lawsuits that have been filed already are civil claims, BC has not ruled out bringing criminal charges in relation to fraud connected to buying these units, so this story will be an interesting one to watch as it develops. Next, the CMHC has announced that the first-time homebuyers incentive is being discontinued as of March 21st. A lot of people DM'd me about this one and there's been a lot of headlines about it, but it's important to remember that this is a ridiculous program that nobody used anyway. If you don't remember, this was the shared equity program where the federal government would give homebuyers a grant to help them fund a down payment in exchange for the government getting a portion of the home equity when they sell. So basically the government gives you some money for a down payment and then they own part of your home. This was already a silly idea that just juices the housing market with more free money and outside investors, but apart from that, they also imposed caps on home prices and income that made it really hard to qualify for this program in the first place. If you had enough money to buy a house in your price range, then for the most part you didn't qualify, but also you didn't need the government to help and probably didn't want to give up part of your home equity anyway. The government cited poor uptake as the reason for getting rid of the program, but also with home prices having fallen substantially since the peak, they may also not want to keep getting into shared equity arrangements with individual homeowners. To illustrate just how unpopular this program was, the CBC made this chart showing the government's target for uptake into the program compared to the actual amount of people who used it. I don't know how much you know about data-driven comedy, but this is very good. I also really like this line from the program. The incentive is like a second mortgage on your house. Yeah, kind of, because you do still have to pay it back when you sell the home or after 25 years, but also if your home value is appreciated, you have to pay back more. Here's the thing, this is a program meant to help people who can already barely afford a home. As we can see from our current situation, there's a lot of people who are house rich and cash poor because all of their money after basic expenses is going to the house. But this first-time homebuyer incentive has to be repaid after 25 years whether or not you sell the house. There's also no repayment schedule, so people can leave it all the way until the 25-year mark. The cap on home appreciation for the shared equity is 8% annually without compounding, so 200% over 25 years. That means if your home value triples over a 25-year period, you need to pay back triple the incentive you initially received. That's actually a fairly realistic increase because that works out to an annualized increase of just 4.5% per year. If you absolutely maxed out the program, buying a new build home in Toronto, Vancouver, or Victoria for $675,000 and getting a 10% down payment through the incentive, that means that if you hold on to the house for the full 25 years and don't repay the incentive early, you could have a bill coming for just over $200,000. Of course, you'd also have a lot more home equity, so you should be able to take out another loan against the house to pay off the incentive, unless you've already borrowed money against the house for something else. Over 18,000 people use the program, so while this won't be a big deal for the overall market, it's pretty likely that this is a scenario that will play out for some people. This program was launched in 2019, so expect to see some stories about this kind of thing popping up in, say, the late 2030s or early 2040s. Frankly, it's a program they should have never done in the first place. It doesn't make housing more affordable, it just pumps in more free money that people can use to bid up prices even further. So as far as I'm concerned, thumbs up for getting rid of it. Finally, mortgage delinquencies have surged across the country, with delinquency rates being up 52% nationally in the fourth quarter of 2023, with BC being up 62% and Ontario being up a whopping 135%. Sounds pretty bad, but as much as we love bad news on this channel, you know what we love even more? Data-driven context. I plugged these increases into the historical numbers for mortgage delinquency rates from the CMHC, and it turns out that while this is a relatively large increase, the reason it seems so large is that we're coming off historical lows. During 2020 and 2021, people were receiving financial support from the government and didn't have a whole lot else to spend money on, which drove mortgage delinquencies to record lows. Compared to that, what we're seeing is more like a return of delinquencies to normal levels rather than an increase to critically high levels. Personally, despite how much they're talked about, I don't think mortgage delinquencies are a very useful stat in terms of looking at what's happening now. The mortgage is the last thing people want to skip payments on, so if we see delinquencies rising significantly, we'll already be well aware that something major is happening. More useful early indicators are trends and precursors to mortgage delinquency, like mortgage prepayment and refinancing, increases in mortgages from private lenders, or increases in credit card debt. Anyway, not really as significant of a story as the headlines would have you believe, but a good reminder to treat all information with some level of skepticism, even if it lines up with our pre-existing opinions. Anyway, that's all for this week, so as usual, thanks for watching and enjoy your weekend.